Good afternoon, everybody. I'd like to welcome you to Advantage Futures office. Appreciate you coming over and seeing the presentation today. I really appreciate Barb Smith-Bailey from the CME for bringing her metals team in from New York to give us a little presentation today about the metals contract. It's been pretty exciting watching the metals markets and what's going on over in England with some of those metal markets and the storage facility problems they're having. So I think it'll be interesting to hear the perspective from the CME today about what their metals contracts are bringing to bear. I know they're bringing a lot of new products up in the metals, so it's growing pretty quickly here in the CME Group business. We've got Miguel and Fred Penha today from New York. They're the metals directors, so hopefully they'll give us some good presentation. If you have questions, please hold them to the end, and then they'll be glad to answer them all. And afterwards today in Greektown, there's CME's holding an event at the Pegasus. So if anybody wants to come by and have a cocktail and some sanaki, you're more than welcome to, and have a conversation with Miguel and Fred. Okay? So thank you very much.
Off we go. Good afternoon, everybody. Thanks for coming. I'm Miguel. I'm a director in the Metals Group over in New York. In the COMEX, my background is primarily in precious metals. I started my career at Morgan Stanley, 14 years ago now, as a clerk, and ended up running their Platinum and Palladium Group metals book, gold, options, forwards, and futures. I then moved on to Mitsui. I started the Bank of America options desk, which ended way too quickly, if you ask me. But anyway. And 2 years ago, I ended up landing on CME's doorstep, and now I do this. So without further ado, I will begin. This is just a quick overview of the products that we have under the metals banner at the CME. Our strength is obviously precious metals. We've had the gold contract since 1974, and the silver contract, as far back as 1933, actually, when it was a 25,000 ounce contract. So it is our core. That said, and I'll talk a little bit about copper when we get to it, but copper has been making huge strides over the last few years, and we're doing some pretty exciting things in the base metal space in general. So we are pushing forward there. And since about 07, 08, we've been slowly creeping into the ferrous and the ferrous and steel markets. So we're starting to expand, not only geographically but also in terms of products. My current sort of purview at the exchange is really the metals options, and it is the area probably of some of the fastest growth at the exchange is happening in our options complex over the last 5 years. It's no surprise, right? We went electronic in 08, and since then volumes have exploded as new entrants have entered the market that previously didn't have access to it. So it's 22% cumulative average growth rate since 2009, and there's a lot of blue there, which is gold. The gold piece of that portfolio is the strongest by far. Silver comes in second. Gold does about 40,000 contracts a day. Silver does around 8 or 9. We just launched weekly metals options last week on Monday, and we've gotten quite a bit of demand from the marketplace with respect to weeklies. The OTC market in London had sort of been clamoring for a little bit more clarity with the short-term dates, and especially on the Fridays. Right? The ETFs, the GLD ETF options have a Friday weekly, and they're very popular. And the banks, a lot of times these gold banks, they can't trade the ETF, so they don't have access to that. And they said, we really do need this. That, and then the prop community as well. Everyone's sort of clamoring for them. The weeklies are a fantastic product. Knock wood, they continue to do well. Unlike most of the things that I've launched, these actually traded the first week, which was really, really nice. In fact, they did quite well. So fingers crossed. We launched them in gold, silver, and copper. We currently have market makers in gold and silver. Copper is taking a little bit of time to get up. We do have 2 guys who are in the process of getting set up for that. So hopefully within the next week or 2 we'll have that going. So pretty excited about that. This is the sort of the core of the business, and it is our gold, silver, and copper contracts. And I do want to point out one thing here, and it is copper. Back in 2009, this is a pretty small blip, and it's not much. And you come over to 2013, and there's all of a sudden a lot of red. Copper, and Freddie will be able to speak to this a little bit more than I will when he gets up here if you guys have questions, but it has been sort of a monumental ride for us. over the last 5 years, it's about 20% growth year on year. We've taken market share from our largest competitor from 5 to 15%. People really appreciate the clarity of being able to trade electronically, knowing what the price is at all times, having liquidity 24 hours a day. It's one of the most international contracts that we have at the exchange. About 25% of the volume gets done overnight. So it's been a really big win for us, and we're hoping that that momentum carries over into our aluminum complex, which also Freddie will speak to in quite a bit of detail after I'm done. But if you haven't seen our copper contract, I cannot stress enough how good a contract it is. These are our minis, our little babies, and as you can see, initially they were very little babies. There was almost nothing. Right until right around 2010 when we launched the micro, the 10-ounce contract. That's the blue there you see, and that's done really well. Really well. It does about 2,000 a day, which is an equivalent to small, but for the retail market, people really do seem to like this contract. Last year, June 2013, we launched the 1,000-ounce silver contract, SIL, and this was it's a bit of a labor of love for me. While I was at Stanley, before I ran the PGM book, I ran the silver book, and silver's always been my favorite commodity to trade. Making millionaires out of billionaires, I should say sometimes, but because it can be scary. And when I was at Mitsui, I traded it when it went from 25 to 50 and back down to 25. Lost a lot of hair, got some hair turned gray, and realized that the contract, even back then, was too big. The contract for smaller people, and I ran a pretty small book there, the 5,000-ounce contract ended up being just too large for the traditional silver trader. For years and years and years, silver was poor man's gold. It's just a smaller way to play in the gold market because the gold contract was so big. But with silver at $25, $50, that's a massive contract, right? It's a $100,000 notional contract with almost twice the volatility of gold. That's not something that FCMs are comfortable having their smaller guys trade in. So we started to put our heads around this and say, look, we need a smaller alternative for the silver market because we know that there are people who have exited and can't come back right now. So in June we launched the 1,000-ounce silver contract, and it's really done an amazing job of gaining traction. 30% month-on-month growth since we launched it, and every month it goes from strength to strength. I think in April we did 1,000 ADV. No, in March we did 1,000 ADV. We did about 700 last month. We're on track for that this month. Every month I look at the numbers. We have more and more retail, more and more FCMs clearing it. It's I personally think in enough time this will end up being the benchmark. And I know that those are bold words given how long that our original silver contract has been around. But given the fact silver started as a 25,000-ounce contract, then got cut down to 10, then got cut down to 5. And during the Hunt brothers in '79, they considered breaking it down to 1,000 ounces because that's the bar size. It would not surprise me at all if this ended up being sort of where silver ends up at the CME. So that is all I have in terms of our products, growth, and just a couple of things I wanted to highlight. The last thing I wanted to end with, funny enough, is silver. And if you look at this chart, this is percentage year-on-year change or month-on-month change of open interest for gold and silver. And you see that we're sort of tracking each other pretty well, so right around here. And gold has fallen off over the last 15 months, and silver hasn't. Silver's almost at all-time highs with respect to open interest. The gold story is a pretty well-worn one last year. ETF sort of mass liquidation. That replaced a little bit by Asian demand, but there's a lot of speculative link that's been taken out of that market, and the silver hasn't reacted in the same way. Now, I no longer trade, so I can't have an opinion about where this thing goes, but I will say that when you get to extremes with respect to open interest, by and large, at some point in the next 6 months, a year, you'll have some sort of a market event. It's unlikely that we remain at these levels unless all of a sudden we have some sort of a new cadre of market participant that I'm not aware of entering the market en masse. Usually when we get to these levels, you can expect some sort of move, either up or down. So just wanted to highlight that for you guys. That's all I had. I'll pass it over to Fred, and then if you have any questions for me after, I'll be around.
tag teaming into the wrestling cage here. Hi everybody. Just make sure I can work this right. Okay, great. Let me just backtrack a little bit to Miguel's point about our copper contract and do that. Can I go back here? There you go. Okay, great. So I think the opportunity for everybody in the room and for your clients is copper is the CME Group's most globally traded contract. 40% of our volume is during non-US hours. So you might say, well, you know, this certain participant in the States has just gotten out of the market. How do we still grow our volumes? Here's maybe your answer. And I think when Miguel was talking about the 20% year-on-year growth, that is Europe and that is Asia. And you know, whatever issues we have here, you still got growth in Asia. Maybe there's problems in Asia. You can always go to Europe, but it's incredibly diversified in terms of a participant set. And if you look at the bank holidays in London or the bank holidays in China, and then you look at our volumes, they're completely correlated. If the Chinese guys are off for vacation for a week, our volumes fall off 30 or 40%. Same thing with London. That creates arbitrage opportunities, right? A lot of people are flowing in. They've got a copper market on the Chinese exchange in Shanghai. They've got a copper market in London, and they've got a copper market here in COMEX. 24 hours, great opportunities to trade it. Miguel touched on it probably very lightly. We've got options that are traded on this contract. This ticker is HX. Very transparent, and the opportunity I think for you guys is that the biggest competitor is this London Metal Exchange LME product, which is not a monthly future contract. It's a forward contract, and it's a rolling forward with daily settlements, and you can't buy and sell the same month. You have to buy and sell and do an adjustment from one date to another. It's a nightmare to trade for most participants. And we were in London 3 or 4 weeks ago talking to some of the biggest guys on the London market, and they said, yeah, well, we just stopped trading the London copper contract. We're just trading COMEX now because you guys are a lot easier to trade. So that brings us to the next slide, which is aluminum. So the aluminum market in London is bigger than our gold market. I don't know if anybody knew that, but the aluminum market's daily volume is more than gold. It's more than copper. It's an incredibly liquid market. It's used for speculating. It's used for physical cash and carry plays. It's financed all over the world. These warehouse issues that were alluded to earlier are aluminum related for all intents and purposes. So the market came to us last year and said, we really need a solution because there are issues in the London exchange. It's hard to trade. The Hong Kong exchange just purchased the LME, and they decided to triple our trading fees. Can you guys offer an alternative, maybe something like your COMEX copper? So we've come out with this new contract. The ticker is ALI, which we can get that up here. Yeah. So this little diagram over here just gives you an idea of what's going on in the market. Because of the warehouse issues that the CFTC is investigating, the DOJ is investigating, the European Antitrust Commission is investigating, the FCA in London is investigating, you've had a huge spike, a doubling of the actual cost to get metal in the cash market. And what that's resulted in is that there's now a 20% basis between what the future's trading on in London and what the cash market is trading at. There's no convergence because you've got 1 or 2 year delays in the warehouses. Seems like a huge opportunity. So the biggest commercials in the world came up to us, and you can read about them in the paper, but if they make Coca-Cola or beer or you name it, they've come up and said, we can't hedge anymore. You know, we're only getting 80% coverage or 75%. If this gets worse, who knows? It's my accountant might say to me, I'm not going to qualify you for hedge accounting anymore. So you're going to have to mark everything to market. It's going to be speculative hedge. Your earnings are going to get volatile. So it's a big opportunity for us. I think it's a big opportunity for you guys as well because we get a lot of clients, a lot of the prop firms, hedge funds are dissatisfied with the LME. It's expensive to trade. It's hard. The latency is very high on their system. This contract will be available to trade on the evening of May 5th, so really May 6th. It's a Tuesday because it's a bank holiday in London, and a lot of the participants are going to be out of the market, so we decided to do it that evening because they asked us to. And we'll be able to offer you the offsets. The offsets between our metals complex and our energy complex are close to 50%. If you're trading the gold contracts Miguel was discussing and an aluminum contract or a copper contract, again 50% offsets, as long as you're long one and short the other. So that's really I guess an overview of what's going on. And I think maybe Miguel can come up, but if you guys have questions you wanted to ask us about any of this stuff, whether it's the precious or the base metal space, please let us know, because I think we're eager for questions. We're tired of talking. So, any questions from the audience? Yeah.
Do you have the other LME contracts like zinc and?
It's a good question. We're hoping to get them out after this one. If it was up to me, we would have started with zinc. Zinc is the most actively traded metal contract on the Shanghai Futures Exchange, more than copper, more than aluminum. And the London Metal Exchange zinc growth has been even greater. It's been about 30% year on year over the last 2 or 3 years. So you think about zinc in the States and no one thinks of it as a real contract. It is a very, very actively traded contract. So if everything goes right with aluminum, we'll have zinc, we'll have nickel, we'll have everything else on the base metal suite.
So copper options are being traded overnight or here because people in China are trading them? Or?
I'll let Miguel answer it. He's our options guru.
Yeah, I wouldn't say guru.
Swami.
And look, I'm going to be pretty frank. I mean, to say that our copper options trade is a slight euphemism.
Okay.
We're working on it.
We're working on it. Yeah, it's a difficult market, and unfortunately, I joined the exchange in 2012, and I have the pleasure of joining right as the copper options market began to sort of implode. Right, because of all the things that are happening, and you can speak to this better than I can, but a lot of financing deals based on copper out of Asia, which has created certain situations that have dampened volatility, and hence people are like, well, if it doesn't move, then the options don't grow, right?
All right.
So that it's, and I'm looking to make a few changes to those options. They at the moment they exercise into the prompt month instead of the active month, so we want to change that. And I would like to make them automatic exercise, which people seem to love. So
we get a couple hundred contracts trading a day, 1 to 200, 3 to 400 on a good day.
Oh, wow.
So nothing really liquid. But that being said, 2 years ago they were trading probably 0.
yeah,
So
like 10. So it's grown.
it's grown, and there are opportunities to do London
Yeah.
copper versus our copper options, the same thing.
Right.
And China will be offering their own copper options in July, I believe, of this year. So you're going to have a nice pool of participants to approach with that.
And even though people don't cross the spread, we have 2 to 3 market makers a day in there all day making prices in copper options. So there are prices on the screen.
So they just get a big kind of bid-ask spread, and they make a little bit of money.
Hopefully, yeah. Hopefully somebody crosses. Now they've gone from about 10 vols to about 2 vols wide. So they've come in quite a bit over the last year and a half. Yeah.
Okay.
Yeah,
Wow.
so it's not, you can't drive a truck through them anymore. Just like a Yahoo or U-Haul. No more semis. Sorry. Sorry. Yeah.
The conflict in Ukraine apparently has some bearing on, is it the palladium?
On palladium, possibly.
Yeah.
Right. Why?
Yeah.
Right. So historically, the largest producer of palladium has been Russia, and I traded palladium for a long time, and every year I'd get a call from some of our Russian clients and be like, "Yeah, we don't have any more. We ran out." I'm like, "Okay, sure." And then they proceed to sell about 200,000 ounces throughout the year. So they have a lot of palladium. And no one knows exactly just how much palladium they have. It does seem like they're maybe not running out, but they're not selling quite as much as they used to. I think it's one of the reasons the prices continue to sort of be buoyed a little bit. So theoretically, if that situation were to escalate, it could have an impact on supply.
On the, you were talking about the 1,000-ounce silver, and so did I hear correctly? And I don't know if this is a different contract, but that silver bars, for example, okay, if it's 1,000, okay, and it's $20, 20 grand. Somebody wanted to take delivery of the actual
bar
metal.
Right.
Yeah, and I understand. I used to do deliveries when the Hunts did their gig back then.
Right.
And you have to get it re-essayed and that, but can you actually get that metal out? I mean, is there actual, because, I mean, ever since Goldman got involved with the LME, now aluminum.
Yeah, no, there's,
2 years.
our silver stocks are actually pretty high these days, so there's plenty of metal. If you want to take delivery of the silver, you can. What you can't do right now, and this is something that I'm looking to try to do towards the end of this year, now that the 1,000-ounce silver is a bit of a viable contract, is to, at the moment, you can't take delivery of just 1 bar. So you have to accumulate 5 certificates of the 1,000-ounce contract and then take delivery of 5,000 ounces. And that's because
Which is 1 bar?
No, that's 5 bars. So that's because our infrastructure for years has been that way, because the contract is a 5,000-ounce contract. If we could change it, and it's just a lot of infrastructure work in the clearinghouse to do this, but I think it'd be worth it. If you could change it, then maybe towards the end of the year you'll be able to take delivery of just 1 bar.
Is that because all those receipts from back whenever are still?
No, it's just the way the contract's written. The contract's written so that if you take delivery of a 5,000-ounce warrant, that's 5 bars. It's the minimum delivery
Okay,
size
when
we
you
have
call
now.
it a warrant, that's, okay, so I understand that, does that mean you cannot get the actual metal out?
You can get them out.
You can get the metal?
You can get them out.
Further to that point, our market reg is very, very transparent and clear about making sure that the market can access the metal when they need it. For our aluminum contract, it'll be physically settled in the North American, but predominantly Midwest part of the country, and there won't be any kind of log jams. We've got very clear rules. We've got warehouses that are comfortable working under those rules, and if you want to get your metal, you show up, and within the allocated time frame, you'll get your metal out. I did want to touch on one point which I sort of overlooked. Because it's going to be a futures contract, if you've got clients who are trading, it'll qualify for 1256 tax treatment, so they'll be able to recognize their 60-40 long-term and short-term gains or losses on it from a tax perspective. Anybody that you have trading LME right now, because the forward doesn't get that tax treatment, I don't know. I mean, some people have mentioned that they might in the future do away with this, but as far as we know now, it's still a valid tax advantage that people can take advantage of and use. So it is something that your funds and clients can use with our physically traded and settled aluminum contract. Does anybody else have any other questions or? Yeah.
A while ago, someone issued copper ETFs. Is that like comparable to?
So what happened with the copper ETF was JP Morgan, BlackRock were going to come out with a similar thing to the GLD. It would have been, you would have had a share of metal in a warehouse. 2 large participants in the copper market sued, and I think they went to the Fed and said this is going to constrain an already very constrained copper market, and I guess they won, right? So the ETF had one issue sort of working against it, but that wasn't really, I think, what would stop that ETF, that copper ETF, from formulating. What did stop it was the warehousing issues, that all of a sudden it became very, very taboo to have metal locked up in a warehouse, and some of the large sponsors of that ETF, BlackRock included, some of the warehouses that were going to hold the metal were defendants, and they just figured it really wouldn't make much sense to do it at this time. From a liquidity standpoint, if GLD is any indication, it would have probably helped the liquidity on the futures contract, but the reality is I don't see a copper ETF coming out anytime soon. There are, however, some small ones traded in London and in Switzerland that are copper and aluminum ETFs, and they are out there, but they've got less than 100 million of metal under assets, so it's not very sizable.
Are these different than the NYMEX contracts?
The old NYMEX aluminum?
I'm sorry, the COMEX?
Well, in what respect? No, it's what do you mean? Is this contract going to be different from the COMEX copper? Or?
Yeah.
It'll be the exact same structure, so it'll be a monthly settled futures contract. It will be similar. It will be a COMEX contract following the NYMEX COMEX rulebook. It is the same thing that your clients are trading now in copper, but just for aluminum.
Are the volume numbers going to be big in that, or probably not?
We've got market makers who have committed, who are very excited about trading it. They're currently trading thousands of lots of our copper contract. They're also trading thousands of lots on the London exchanges, and they've said this is a great market for us to help lead. So we're hoping for a nice initial launch on May 6th. Yeah, should be.
Are you just launching futures, or do you have options on it too?
So the options are going to follow probably Q4. We have to wait a little bit to see how the market structures its trading, whether or not it trades monthly or whether or not it trades on cycle months the way the other ones trade. My guess is as good as anybody's. I have no idea. It trades every day basically on the LME, so we'll have to see whether or not it goes ahead and trades like copper, where it does a DC March, May, July, 7, or whether or not we do every month. Because then at that point, we can figure out the rules for the options that make sense. We also have to wait and see. We need some underlying liquidity before we can launch the options. So.
Because we won't have any of these warehouse delays on our contract, we expect to be trading at a quote-unquote converged future and cash price, in which case this basis that you're seeing on the LME of 20 or 30%, depending on where you're on, won't exist. I mean, if you are an aluminum hedger or consumer, you'll pay what the market is actually trading at. That basis has really killed the aluminum options market in London. If you were GM or you were BMW and you were trading copper options out for a year, and all of a sudden your bank went to you and said, well, by the way, you're only going to be covering 75% of your exposure, they just said, well, forget it, we're not even going to hedge. If we offer one all-in price without any kind of basis, we hope that will be a solution for everybody.
Yeah, it should attract hedgers back into the market. I mean, at the moment, the most volatile piece of aluminum prices is the premium. Aluminum doesn't really move that much, and the premium is the part that you can't hedge. So writing options on aluminum doesn't make much sense.
And the fact that a lot of these big banks are starting pulling out of the business are making it even harder to trade this premium.
Yeah, the real hope with the options market is, and with the futures, is there's a large group of market participants that don't currently trade aluminum at all, never touched it. Very similar to the way there was a big piece of the market that didn't trade gold back in 2005 because it was sitting in a pit in New York. And when CBOT went ahead and launched it on Globex, all of a sudden there was this wave of interest to trade this thing that really nobody knew about. Well, somebody at the CBOT certainly knew about it, but no one in New York did. And the situation with aluminum is analogous. It really is, where their structure, the LME, really has not come into the 21st century yet, and this is sort of ushering in that new technological wave. So we should get a lot of interest from guys who've never touched it, both on the futures and the options.
If you've got guys who've historically traded S&Ps or energies, we've spoken to some of them, and they've told us, yeah, this year for the first time we're actually trading your copper contract. Maybe from a strategy perspective, there's just a new strategy they could take advantage of. I would definitely go up to guys like that, or maybe have been historically energy or possibly other commodities, and just say, you may want to look at this copper contract, and then once they see the liquidity and they're comfortable with that, then talk about our aluminum contract. Because as Miguel said, guys who've never traded before in the last 2 or 3 months have started really trading in very, very large quantities.
Yeah. I mean, copper is now the second largest metals contract at COMEX. So the liquidity is palpable.
It's about 70,000 contracts a day. So it's not. Any other questions?
All right, gentlemen. Thank you.
Thank you.
Thank you. Thanks, Barb again, Freddie and Miguel for coming out again, and thank you for all coming. And hopefully, if you'd like to go over to the event over in Greektown, you're more than welcome to attend, and you can ask these guys some more interesting questions about the metals and the aluminum contracts. So thanks again for attending, and look forward to next month. We'll be doing another one. I'm not quite, do we know what it is? Not yet? Okay, we haven't nailed it down, but we'll have another announcement in the next couple of weeks about next month, okay? Thanks again.
Thank you.
Thanks, guys.